I think what the Fed did today was what was expected. They continue to step back the tapering process by another $10 billion. They also pledged to keep those short-term rates unchanged. So I think the message to consumers and businesses is 2014 could be your last hurrah to pay down that variable rate debt. Things like credit cards, home equity lines of credit, student loans, while you have this tailwind of record low rates rather than the headwind of rising rates. Because come 2015, 2016, then rates are going to start to move up. You're going to have a headwind. Now's the time to really make some headway on that variable rate debt.
Yeah, Sharon?
What about all those retirees out there looking for some type of safe haven? Maybe they have a lot of money in CDs, also their fixed income investments. What can they expect?
More of the same, unfortunately. It's been a brutal environment for savers and anybody hunkering down in safe haven investments, and not just recently, but for the last 5 years. And unfortunately, that's not going to change anytime soon. And even when it does, even when interest rates start to go up, that's only the one barometer you're going to have to watch. You're also going to have to keep an eye on inflation. If the Fed has to chase inflation, higher interest rates or not, it's not going to be better for savers.
Kevin, what happens to housing affordability if Yellen actually gets rates to come up a little bit, which might be a concern that she has, too, for folks who are trying to live off a certificate of deposit?
Well, I think the long-term rates, that's where that risk comes in. If we start a jump in long-term rates, kind of like we saw this time last year when the Fed kind of misstepped verbally a little bit and we saw about a 100 basis point jump in rates, if we saw something like that again this year, I think it really brings housing affordability into the question. Could definitely be a headwind to the housing market. But short of that, I think the combination of home prices and mortgage rates where they are, we're not at an affordability issue now, other than, say, for the first-time home buyer who's pretty tight.
Greg,
with cash.
my prediction, housing affordability goes down in March.